Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Wednesday, May 15th, 2019. We're in the last hour of the trading day. This is the hour that I feel gives you the most clarity as far as closing prices. I feel the closing prices are the strongest and most valid price of the day. That is why I generally do most of my trading just as close to the end of the day as possible. So anyway, what we're going to do today, first we're going to run the legal disclaimer, then we are going to go over my current positions, why I got in them, how I'm managing them going forward. Then we're going to turn to my watch list and we're going to go down and we're going to analyze each chart and see if there's a potential setup for the end of the day. And then when we are done with that, and then after the market closes, I am happy to answer any questions you have about what I did during this session or any questions from previous sessions. So if you have questions, just keep them in mind, and I'm happy to answer them at the end after the market closes. So okay, first things first, let's run the legal disclaimer, and then I will be back in 40 seconds and we'll get down to business. Hold on one second.
This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much.
All right. Okay, so been an interesting day. We opened up lower, we reversed higher. President Trump came out and said that they were going to delay some of the tariffs. That was good for the autos, obviously. So let's take a look. Let's just take a look quickly. Oh, by the way, yesterday I had problems with my charts. If you were on, you saw that, and it was the stock chart providers. They did have an issue with their data stream. So we are back up. You'll see today that it does not show the opening price, just the current price, which is fine, but just keep that in mind. So going forward, looks like we'll have our charts back. That was tough, you know, as many of you know who have your own charts, you have them all set up the way you like them, and then if you have to hurry and switch over to a different platform, it just looks like you're reading another language and you don't have things where you like them. So, you know, it's a good point to make here that it's important to have redundancies. I mean, I did have redundancies, but I just couldn't put them on the other screen so I could show you. So, you know, have redundancies with your internet connection. You know, if your regular router doesn't work, you know, at least you have a hotspot on your phone, and then have some kind of backup charting as well, because these things happen, and for some reason they tend to generally happen when the market's going crazy. I don't know why that is, but it is true. So, all right, let's take a look here. Okay, hey Frederick, how you doing, my friend? Good to see you. Thanks for coming by. I appreciate it. All right, so let's take a look at the current positions and see what's happening. So the Dow Jones Industrial, I did buy this back here on the 13th of May, down here when we went below 30, and then we closed back up above 30 at the close. And so that showed me that there were no other sellers underneath 30, and that you know, that gave me the buy signal. If I would have closed below 30, just even by a penny the next day, I would have gotten out. But you can see this gives a nice risk to reward ratio. If I'm wrong, I'm probably wrong small, and if I'm right, Well, I let it run. So I think we hit 2 profit targets yesterday. We did hit another one today. So I'm out about 36% of the position. One thing I want to point out is that we are currently at a 41.34 RSI. Now, a lot of times when you get into this low RSI area, you're going to probably have some issues when you get back up to the 50 RSI. So, maybe we have another day here. I don't know. Going up, I mean, we may go up for a week. I just don't know. But in a general sense, I will be looking to see in the next coming days if we do test 50 RSI and then close below it, then I'll go ahead and just take my profit on the entire position. But so far, this has been a really nice position. We bought it down here. It's up here. But the point I want to try to make is that, your risk, small risk, and you have multiples to the upside on the reward side. Okay, gold. I did buy gold back here on the 10th of May when we had the 520 EMA cross. We were fortunate enough the next day to just gap right on up. We hit 4 profit targets on that, which was great. So there's 2 ways to handle this moving forward. If you want to just use the 520 cross mechanically, you would just stay in the trade until the 5 closes back under the 20-day moving average. Now, if I was trading this discretionarily, I would use the 520 as my entry trigger. And if I was trading this discretionarily, I would just probably get out today, being that it lost the 100-day moving average. But I'm not. I'm going to be patient with this trade. I'm just going to use the 520 cross as a mechanical entry exit system for this. So if I had not already phased out of like 48% of the trade, I probably would just take the whole thing. But being that I offloaded almost half of my position, it makes it a little easier to keep it and risk open profits for higher rewards. So as long as the 5 stays above this 20, I am going to just stay in the trade. And if it starts and it keeps going up, then of course I will phase as it goes up. But on the way down, I will not exit until we have a 520 cross back the other way. Nike. I did buy Nike here back on the 9th of May. And the reason I bought it was because we had a V1. This bar went lower than the previous day, closed above the close of the previous day. That is a V1. And then we also washed out the 100-day moving average as well. And we closed back up into the channel. We closed above the 3rd ATR channel, which is this line right here. So V1 rejected the 100, closed back up into the channel. That was my entry. Got out of 2 profit targets the next day. Then we had that big down day on Friday, I believe. Or was it Monday? It was Monday. It went below, my trailing stop was this 100-day moving average, but it did go below, but fortunately it closed back above the 100-day, and the 100-day was my line in the sand, right? That was my stop on a closing basis, but it did stay above there, and it let me stay in the trade. I hit 2 more profit targets yesterday, 1 more today. So it's been a nice profit target. I'm out about 50% of the trade. And also the RSI here on Nike is 45. So we are getting into that space, folks, where I'm going to have to watch this carefully, because if we go up to a 50 RSI, this line here, 8508, that is a 50 RSI moving forward. It will change every day, but currently that's where the 50 RSI is. So if we get up to here and close above, I will continue to hold it. But if we get up to there, test it and reject it, that will be my signal to exit the trade. So I hope that makes sense. NVIDIA. So we bought NVIDIA yesterday when we closed above the 100-day moving average. If today we close below the 100, I'm just going to have to get out and take a small loss. But if we were right, we had possibility to go up into this range. But if I'm wrong, like it looks like we're going to be today, then I just get out with a very small loss, right? So from here to here would be the loss. From here up into this range would be some type of profit potential. But you never know which way the market's going to go, no matter how good the setup is. It's important as a trader. Your job as a trader is to manage your risk and your profits. That's all you have control over, is managing how much you lose and if you let your profits run. And it's very difficult to let your profits run and to cut your losses short. Most people want to do the opposite. They want to let their they want to let their losses run for some strange reason, because if they have to get out and take the loss, then it proves that they were wrong on the trade. And people honestly do not like to be wrong. It feels better just to have some hope and say, okay, well, it should come back. But if you're going to do what most traders do, if you're going to do what feels right, you're most likely going to lose money. Like the 88% of people who try to trade lose money. And why? Because they're generally doing things that make them feel good. It's very strange in trading. It's sometimes you have to do the things that don't feel good. You have to be counterintuitive. So anyway, if we close below the 100-day moving average, which is the red line, I will be getting out. Okay, SPY. Well, this was a bummer. Quickly, let me show you. Most of you know this, but if we have some new viewers, I do buy the SPY every day at the end of the day, and the reason is based upon this study. Since 1993, if you would have bought the SPY on the open and sold it on the close each day, you would have actually had a negative 5.2% return. But if you did the opposite and you bought on the close and then sold on the opening, you would have returned 568%, meaning that more than all performance came in after hours trading. So, those are some pretty strong statistics. This last 10 days has been difficult doing this. I've probably lost 8 out of 10 days maybe. But overall, I'm up on the trade, and that's reflected in the chart here. You can see that over long term, it has done very, very well. But there are times when you have these drawdowns where you think, oh, this is a horrible approach. But you have to take the long view. You have to look at it in the big picture. To me, it feels like I've done this lately, but I am up. I am profitable doing this. So even though I've had a down move, overall I'm up. So I will continue to do this. I'll buy the SPY every day at the end of the at the close, 10% position size based upon these results. So okay, so back to SPY. So I did buy SPY here yesterday at the close, and this chart here, because of the issue with the data kicked in here and it's gone up, but actually it opened here. So I did take that loss there. So this is one of those ones where it would have been nice to have held it, but that's not the system, right? Most of the time, if you hold it based upon the results of that study, you're going to do worse than if you sold it at the open. All right, hope that makes sense. Tesla. So I did buy Tesla yesterday. And why did I buy it? I bought it because this was the previous range over here. We went below it. Then yesterday we closed back above into the old range. Plus we had this double bottom with the divergence. See, we have a low, we have a rally, we have a lower low. You see how shallow these red bars are, even though this is lower than over here, and how deep these red bars are? Yep, that's right, Bruce. The earnings for NVIDIA, it's tomorrow, I believe. Yeah, it's tomorrow. So I did buy it. My stop is a close back in the old range. Well, here we are. We are in the old range. 2150 is the line. We're at 20. 230.90. So if it closes under 231.50, I will get out. But you can see for a very small loss. You know, my target was up into this range, so I have a lot more reward if I'm right than risk if I'm wrong. But in this particular case, you know, it looks like if the market were to close right now, it looks like we would get out. So 23.50 is the line in the sand for me. Under that, I will get out. All right, Tesla. I did buy Tesla here on the 10th of May. And why did we buy it? Well, first of all, we took out this previous fractal. We took out this previous range. A fractal has two lower highs to the left, two lower highs to the right. On this particular day, we did take out that fractal. We did close above the 20-day moving average, which is the blue line. We closed above a 50 RSI. These are all positive indicators. Yesterday we hit two profit targets. 2 days ago we hit two profit targets. Yesterday I hit one more profit target. So I'm out 30% of the position on this particular trade. Today it has reversed. I will be using a close under the 20-day as my stop. So, you know, we bought here. Let's say we got out right here, it would be a loss here, but remember I got out of 30% of the position on the way up. So this makes it very close to a scratch break-even trade. So for UNG, a close below 22.59 will be my line in the sand. If it closes below 22.59, I will get out of the trade. All right. Okay, so let me take a look over here. All right. Yeah, earnings are tomorrow, Bruce, at the after the close. But currently, right now, it looks like we will be getting out of this anyway. All right. All right. Let's turn and see let's go to my watch list and see if there's anything that's interesting to buy today. So we've had a good rally the last couple of the days. You know, I would possibly be interested in Apple if we were to close above the 200-day moving average. But it's not there yet. And even if it did get there, I don't like lower low entries. It's not that I don't take them, but I usually take a half position. I usually take half positions when I have a lower low. I take a full position if I have a higher low underneath me. But you can see how obviously this is lower than here. People that bought down here, if it gets up to this 200 and fails, it's very likely they will lock in their profit. That will cause it to go back down. It may go back down and test, but if it's able to hold and then move back up and have a higher low entry, that would be the one that I would that would be the one that I would take with the full position. But right now with Apple, I would not take this. This would very least have to close above the 200-day for me to take this, and even then it would be half position. Amgen, you know, we were under 30 RSI. I did buy it here. I bought it here because we had this V1 and we rejected this previous low, but I did sell it for a loss down here when we broke out and closed under, broke to the downside and closed under the 30. Today we've rallied a bit, but the only thing you have is a below 30, above 30. So I'm not interested in Amgen going forward. Amazon, big day, did have that nice reversal under the 50-day under the 50-day and then close back above. I was waiting for it to close under the 50 and then back over the 50. So the people that bought here, right now it's a 49.53 RSI. So this is a good example. The people that were lucky enough to have bought down here they're going to be watching this very closely. If this closes under the 50 RSI, because you can see it was above the 50 RSI intraday. So if this closes underneath the 50 RSI, there's a very good chance that the people bought here will be selling today. So I would not buy here because it's almost a 50 RSI, and if I would have bought down here, the 50 RSI would have been my profit target. So I'm a little concerned with the market today being not that it's gone up, but it's gone up right to where most people that had bought the dip would be looking to sell. So nothing on Amazon right now. Boeing did go from under 30 over 30, but that's about the only thing it has going for it. Well, other than it's up in the third ATR channel, but I wouldn't be interested in this. I would like to see this move up, come back down a little bit, have a higher low, and move back up there. That's where I would be interested. Alibaba, big day, had earnings. It's up 2.8%. So again, people that bought down here or even bought here, right now you can see it's catching some resistance at the 50 RSI above it. And so the people that bought here will be pretty much looking to sell here at the 50. So I would not chase this because it's almost to where the profit target is of what the profit target would be if I would have bought it down here. And that's how traders think. People that buy down here, it gets up to that 50 RSI, it starts to slow down, can't move any higher or goes back down. That's where they will lock in their profits. Caterpillar, similar to Boeing, it did go from under 30 to over 30, and currently is inside of the one ATR channel, or the third ATR channel, but not enough for me there. I'd like to see it come down, make a higher low. All right, Canopy Growth. You know, we had that big sell-off day. We rallied to the 50 moving average, which is the gray line. It went above it earlier today. It actually did go above the 50-day and the 50 RSI, and now looks currently right now it's below both of them. So if I would have had bought this, I would be selling here at the end of the day if that's where it closed. Cisco has earnings today. We did go under 30, over 30, but you know, if I had a double bottom or something like that, I would look to buy this, but not here, not in front of earnings, and not just a under 30, over 30 bounce. It's not enough. All right, DDM. Yesterday, it did not close above the 200-day. If it had closed above, I would have bought it. But today, it does look like it's going to close above the 200-day moving average. We'll see, right? We have to wait for the end of the day. But let me show you the back test on DDM. Let's see. Oh, yeah, that's based off the 200. And I should mention that I am using these results from etfreplay.com by permission. So I think this is a really, really good program. You can go in and you can backtest all sorts of stuff. So DDM. Now, DDM is a double leveraged Dow. It's 2 times leveraged. So I would not buy a regular position in this. Because that would be like me buying a 20% position size. I will buy a half size because it's a double leverage. I will buy a half size. I will buy a 5% position, but that will actually really equate to a 10% position because it's double leveraged. But if we look at the returns on buying the DDM with a close over the 200, since 2002, this returned 305.4% using this strategy. And it only had a 28.8% drawdown, where buying and just holding it, you would have only made 260% and you would have had an 81.7% drawdown. So which one would you choose? Would you rather make 304 and only lose 28%, or would you rather only make 260% and have an 81% drawdown? Pretty easy choice, right? Doesn't mean it's going to happen in the future, but you know, these are the results from the past, and that's better than nothing. It only has a 23.8% win percentage. So it's not a high win percentage, but the wins compared to the losses are huge. The average win is 13.6%. The average loss is only 2%. So, some of the best systems out there have a low winning percentage, but a really high win to loss ratio. So I will be buying this today if it closes above the 200-day moving average based on this back test. So we will check that and we'll look at that. I do have the regular diamonds here. As we know, if it closes up to the 50 RSI and rejects it, I will be getting out of that as well. But currently everything looks good and we're going to keep it. So Dexcom, it's kind of range bound. Did have a big strong day up yesterday. There's really nothing there for me to be interested in this time. eBay had that big down, had that big reversal. A key point to look on eBay is whether it can close above this 50 moving average, which is the gray line, and whether it can close above the 50 RSI. If it gets rejected at both the 50 RSI and the 50 moving average, that's generally not a good sign. But I certainly would not be buying it here, because if I would have bought it back here, it's exactly where I would be looking to take my profit. Etsy. Well, Etsy did have a big day. It did go right above the 100-day moving average. This could be interesting. It is coming from a lower low, not a higher low. So if I did buy Etsy, I would only buy a half position of it. Let me hurry and do my numbers real quick. Okay, so this is a possibility. And the reason it's a possibility because it closed above the 100-day moving average. It gives us a good risk to reward ratio if we're wrong, and it still gives us some decent upside if we're right. So we'll watch that. I'll put that on the list. Let's take a look at the weekly. Closing back above the 20-day moving average would be good, and currently it is above that. You can see it's 61.56 and 61.43. That's the 20-week moving average. So this is a possibility, but mainly because it gives a good risk to reward ratio, using the 100 as your initial stop. Facebook, this is coming from a lower low. We are at a 53.43 RSI. That is positive in the fact that it is holding the 50, but I would not be interested in buying this here. I feel like here you're chasing. Five Below, where I'd really like to buy Five Below is a close below the 100 and back over. If we get down to the 100-day moving average, we'll be in the low 30s. And it's always nice to have a confluence of a low RSI reading, like a 30 RSI reading, 30.33, at the same time being in a major moving average. But right here, possibly a close above the 50, or a close under and close over the 100. Swiss francs did have a nice move up, had a little sell-off, nothing there. General Electric, is having a close above the 200-day moving average, but it's coming from a lower low, which I don't like. I would much rather have this go up, close back below, and then buy the next break over the 200 when I have a higher low underneath me, because right now we have a lower low underneath us. Okay, gold, we talked about gold already. We bought the 520 cross. We got out of about 48%. I will be keeping gold as long as the 20-day stays above, the 5-day, stays above the 20-day moving average. So Google, okay, so this is one of those tough ones because, you know, I wanted to buy a close back above the 200-day moving average. However, now we are at a 45.18 RSI. And if I would have bought down in this range, my target would be a 50 RSI. And we are very, very close to it. So if I'm wrong, I'm probably wrong all the way back down to here. If I'm right, I may be only right this much, right? So I am going to have to let this go, unfortunately. You know, if it comes back down and tests the 200, then I would get interested again. Even if it came down maybe to halfway, I would be interested because I would still use the 200-day as my stop underneath me, but that gives me a better risk to reward, right? If I bought here and my stop is here, that gives me a very small risk and a good reward. But now the risk to reward is skewed. I really feel like I'm taking on more risk than the possibility of the reward. So I will let go. I will let Google go here. I do know some people that bought it down here yesterday, and so really glad for them that they had a great trade. All right, Goldman Sachs. Goldman Sachs, nothing very interesting there. HCA, not very interesting there as well. It's just very range bound, has a lot of resistance above it. IBB, you know, on the positive, we did test this previous range when we were closing back above the range, but we're at a 39 RSI. My profit target would be about a 50. So we essentially have 11 RSI points to the upside and 9 to the downside. It's too much of just a one-to-one type of trade at this point. So I'm going to let that one go. Intel, you know, we've had this big down move. We are having a rally, but I'm not going to get involved in this. It's a 25.83 RSI. My feeling, if it continues to rally, it will rally up to the 30, find resistance at the 30, and then possibly come back down. You know, I am interested in Intel long-term, possibly selling some long-term puts on this, possibly down here to the $40 range. But as far as just a regular trade at the moment, I really would have to have this rally, come back down, create a double bottom with the bullish divergence, or at the very least close back above the 200. So it looks tempting, but I'm going to let it go. IWM is having a nice day today. Again, we're coming from lower lows. At the very least, I'd have to close above the 200 in order for me to get interested in this. Okay, Johnson & Johnson. Boy, it's tested that 200 multiple times, hasn't it? The more times you test a moving average, the more likely it will go through. So who knows? Who knows what's going to happen with that? But I'm not interested in that at the moment at all. Coca-Cola, big day up. It's a 65 RSI. It's a little too high for me. Lockheed Martin's just moving sidewards. MasterCard, big day up today for sure. It's a 60.51 RSI. Yeah, I don't think I'm going to take this. I don't like the risk to reward. You know, it's important to me. The main thing I look at is what is the risk to reward of the trade. 3M, looks like 3M finally is catching a little bit of support after this big move down. For me to get interested in the trade, I really would have to have a rally, have it sell off, make a higher low, have a V1, V2 entry to the upside. So nothing today. Altria Group has a nice close. I mean, it's closing above the 200-day or the 100-day moving average. I don't really like the weekly. There's really no support there. I'm going to let that one go. Merck's tempted to rally a little bit, still has all these still has these moving averages above it, nothing there. Microsoft, still range bound. You know, there's no V1s, V2s, there's really nothing there to get me interested. Netflix, you know, Netflix did have that nice bounce off the 100-day moving average, but it's a 44 RSI, so you know, a lot of people are going to be looking to lock in their profits at the 50 RSI if it gets there. So I feel like the risk to reward on this trade is no longer valid. Nike we have. It's moving our way today. Hit one profit target. NVIDIA we bought here when it closed back above the 100-day moving average. Went against us today, so we will be looks like I will be locking in a small loss with a close under the 100-day. Philip Morris had a big day yesterday and then continued a little bit today. Did have a nice double bottom with the divergence. Right here's the low, rallies, makes it close to a double bottom, but has this big divergence. Right, the bars here are so deep. The bars on this second bottom, very, very narrow or shallow. This is what Dr. Jorgensen calls not Dr. Jorgensen, sorry, Dr. Alexander Elder calls a double bottom with a bullish divergence. And this is a bullish divergence when the second bottom has a lower MACD reading than the first. Where would be the trigger? You know, I guess this could have been one. But I was waiting for it to go under the 200 and then close back above or give me a better RSI reading. So would I buy it now? Probably not. PayPal, nice big update today, but still range bound. Really no signals. What to speak of. Okay, so here are the cues. This is the NASDAQ 100. If this does close above the 50-day moving average, this is the gray line, I will be buying this, and I will be buying this based on a back test. So this is the 50-day moving average. Let's take a look and put in the cues over here on ETF replay. So based upon buying over the under and then it closed back over the 50-day moving average, here are the results. Using the I'm in above, I'm out below, 147.7% return with a 32% drawdown. Buy and hold, 91.7% with an 83% drawdown. So you can see the approach of buying and holding over the 50-day and selling under the 50-day far outweighs just the buying and the holding of the Qs. Only wins 29.4% of the time, but the winners, you can see average winner is 4.46, the average loser is only 1.42. So if this does close and above the 50, I will buy it. And what I really like is, you see, if I'm wrong, you see how close I am to my entry. Very, very close. If I'm wrong even a penny the next day, I'm out. I definitely will be buying the Qs. I'll be buying a half position because why? Because we came down here into the low RSI reading. Now we've rallied. We're close to the 50 RSI. That is where a lot of people are going to take profits. If this happened and I haven't had a higher low, let's say it came back down here and then went up and I had a higher low than the previous low, then I would take a full position. But if this closes above 183.05, I will be taking a half position, and you can see it's 183.22 right now. So it will be close, but this is a good example of a good risk to reward ratio using a back-tested, valid approach, which is the close below 50, I'm out of the trade, close above the 50 moving average, I'm in the trade. And it has valid data to tell you that that is a profitable approach over time. Going forward, who knows? But in the past, it certainly has been. All right, silver is not doing anything interesting. S&P, you know, I might be interested in the S&P. It does back test well as well, but would have to close above the 50-day moving average, and it's not there at the moment. So I'll let that go, but I am going to buy that at the end of the day for our overnight trade. Square, you know, here it's a lower low than the previous low. We've rallied. I would really, in order for me to get interested in Square, I would have to have this rally up, attempt to come back down, not be able to, go back up, create a higher low. You know, higher lows are so important. If you haven't watched my videos on higher low, you can find them on my YouTube channel about why higher lows are so important in trading. So if you haven't watched that, you know, take a look. I went through a bunch of examples, showed examples of different charts. So I think it'll be helpful if you have time to watch that. AT&T, you know, this is a possibility if this closes above the 200-day moving average. And let me hurry and do my numbers on this. All right, give me 1 second, please. Let's see where we're at. So if AT&T closes above the 200-day, I would be interested in possibly taking a position in this. So that's the line in the sand right there at 31.22. MACD has just crossed positive. We're above a 50 RSI. We actually did trigger a fractal back here as well. So yeah, I will be buying this if it closes above the 200-day moving average. I do like that. Bonds went up today, too high. Tesla is right there on the button for us. 31.50 is our stop, and it is very, very close at the moment, right? So we'll be watching that. UNG, we do have a close under the 20-day moving average. I will be out. Healthcare, not doing too much. Oil, boy, did get into oil here. Got out of about 40% of the position here. Then it reversed, closed back under. I did get back out, but still made money on the trade. Right now, you know, it's moving on up, but I don't like that we have this big bar in front of it, so I'm going to let that one go. Dollar rallying a little bit today. Visa up nicely. I'd like to see a pullback though. I feel like I'm chasing it at this point. It's important not to chase. It's important to let the trades come to you and not just to chase them because you feel like the market's taken off without you. It usually comes back. A lot of the times it comes back. Energy Select, you know, possibly a close above the 100-day moving average might be interesting, but I don't think it's going to get there today. Consumer Staples, it's up, but it's range bound and really nothing else going for it. Real estate did break out to the upside. Let's take a look here. Hey, Chris Knight, how you doing? Thanks for coming by. I appreciate it. Okay, so, you know, would I be interested in real estate? You know, it's not bad, but again, I feel like I'm chasing it up there at 60. It's a breakout, kind of a high breakout. MACD is positive. It is above a 50 RSI. You know, it's not bad, but I'm gonna let it go. Okay, and healthcare. Healthcare is not doing much today at all. So, okay, let's take a look at our possibilities here for today. And let's take a quick look at our regular positions here. So Dow, we're fine. We hit one profit target. Gold, back up. That's good. Nike, it did hit one profit target. Did not test the 50, so I'll keep that. Nvidia does look like it's going to close under the 100-day, which was our stop. SPY, we'll be buying that at the end of the day. Tesla does look like it's closing back above there, so that's good. Let me take a look. Just give me a second. Okay. All right, so we have to watch that one. We have to watch Tesla. We'll keep in it with a close over 231.50, and currently we are right there. And then UNG, unless it has some amazing comeback, I will get out with a close under the 20. Okay, so Pro Shares, which is the double leveraged Dow, I showed you the back test on that. A close above the 200, I will buy it. It is a double leverage, so I'm only going to buy half of the position because it moves twice as much as the regular Dow. So if I took a 10% position, it's really like taking a 20% position. So I will be taking a 5% position size above the 200-day moving average if it closes there, and then I will keep that until it closes back under. Etsy. Let me run those numbers one more time. Yeah. Well. I'm gonna let it go. It's decent. There's no doubt. But you know, if I take the Qs or the Dow, this is most likely going to go the same way. So I don't want to have too much correlation. So I am gonna let Etsy go. The Qs, if it does close above the 50-day moving average 183.05, I will be buying that. I will also be buying a half position size because we're coming from a lower low. We don't have a higher low, and when that happens, I like to buy. When I don't have a higher low, I like to buy a half position. And then AT&T. I do like the MACD crossing over the low but positive RSI reading and a close back above. So AT&T. So really the three potentials today are the DDM half position with a close over the 200, the Qs a half position with a close over 183.05, and AT&T with a close over 31.22. So I'm going to go ahead and it looks like Nvidia is going to be out of there. So let me just go ahead, get rid of Nvidia. because I'm going to have too many things to do at the end there. All right.
Order filled.
All right. And then over here. Sorry, folks. Okay. Sorry. Having a problem with this other platform over here. All right, back to business. All right, so I'm adding NVIDIA. Tesla looks like it's going to be a keeper. Looks like the market's selling off a little bit. All right. DDM, that looks fine. We're going to give it till about 5 minutes. The Qs with a close under or above 183.05, so that is very close. AT&T does look like that's going to be good. UNG, we are going to get out of that. That is going to be close. I'm going to have to wait till the end. So we are out of NVIDIA. Just get rid of that and free up some screen space. All right. Be interesting to see what happens here if this can hold. 140 on the Dow. We've got about 8 minutes. All right, folks, give me 1 minute. I will be back in 1 minute. I have to move my dogs around. They're throwing a fit. Just give me 1 second, please. Okay, sorry about that. Thanks for holding with me. Okay, so UNG seems like it's coming back a little bit, but a close under 22.59, we will be out. Tesla does look like it's going to close above, which is positive. DDM does look like it's going to close above the 200. The Qs does look like it's going to close. AT&T certainly looks like it's going to close. So I'm going to go ahead right now, and I'm going to just go ahead and buy my SPY positions. And that's my regular 10% position that I buy every night at the close. And then I will be selling this the first thing in the morning.
Order filled.
All right, so we got filled at 285.30. Okay. UNG we're watching. Dow we're waiting. We'll try to get just as close as we can to the end of the day. So it does look like Apple is closing above the 200-day. Oh boy, it's a tough one, folks. That is a super, super tough one. Four minutes left. And DDM. All right. All right, I'm going to go ahead. I'm going to lock in UNG. That ended up being about a scratch trade because we phased out to the upside. So UNG is out of there. Diamonds are fine. Gold is fine. Nike is still fine. We're going to be buying the S&P. Tesla closing above 231.50. Okay. Oh, that's going to be very close on the Qs. AT&T looks fine, so all right, so I'm going to go ahead and buy AT&T.
Order partially filled.
31.27.
Order filled.
Here's my entry. All right. Looks like Qs are underneath now. Oh boy.
Order filled. Order filled.
All right. Well,
Order cancelled.
we got everything with seconds to go. My goodness. All right. So we did get DDM. And I got DDM at 45.28. And got AT&T at 31.27, and then got
Order cancelled.
the SPY at 285.04. And we did not get the Qs. At least I did not get them. It did close. It closed 4 cents above, but that's what happens sometimes, you know, when you wait till the very end and you have other positions you have to deal with. So that's okay. That's fine. You know, we have other positions, and if the Qs go up, I'm sure our other positions will go up as well. So, boy, what an interesting trading day. Hey, before we get to questions and answers, I just want to let you know, just my little plug, that I do offer private one-on-one teaching lessons in the evening time via Skype. So if that's of interest to you, you know, if you feel like you could use some one-on-one help, please let me know. Please email me. Generally, I have a quick chat on the phone or over Skype, just to kind of get to know you and get to understand how you're trading, what you're having difficulty with, and honestly, just seeing if there's something, if I feel like I could help you. If I don't really feel like you're in the positions I can't help you, I really don't, you know, you probably don't need me as a teacher, but if I really feel like I can offer something, then I'm happy to do that. So my email is in the description of this video, and then my hourly rates as well. So, okay, with that being said, let's take a look and see if anyone has any questions at all for me today. Explain to the folks what you are doing when you are doing your calculations during the broadcast. Yeah, so that's my position sizing, what I'm doing. So, you know, if I look at AT&T and I say, okay, AT&T looks like a buy, I have to do my calculations. What I'm doing is I'm taking 10% of my account. So let's say I had $10,000 in my account, and I'm going to use a 10% position size to buy AT&T. So, you know, let's just do it. 10% of 1,000 is, 10% of 10,000 is $1,000. And then, so I would be buying $1,000 worth of AT&T, and the price is $31.25. So that means I would be buying 32 shares. So I just take 10% of my account balance, and then that's the amount I use to buy the shares that I'm going to buy. So, because at the end of the day, when you have, you know, you're about to buy everything, you have a lot going on, you need to know exactly how many shares you're buying. So when I say, hey, let me run my numbers, I just need them in front of me. So going forward, I just have them right there. What's the minimum? Frederick asks, what's the minimum market cap you trade, if any? You know, Frederick, because I trade all large cap stocks, I mean, you know, basically S&P 100 or NASDAQ 100 stocks or the major indexes, it's never really an issue. I don't think I really have a specific number that I could give you other than probably more important than the market cap is the volume, you know, maybe 250,000 shares or more each day, because without the volume, you don't have the liquidity. So yeah, it's tough for me to give you a specific answer on market cap, because everything I trade is just a big, large, mega cap type of vehicle. All right. So I hope that helps, Frederick. Yeah, I better have a talk with the dogs. Yeah, I'm dog sitting another dog, so we're having some doggy jealousy issues going on when I'm doing the live stream. All right, does anyone else have any questions for me at all? Okay, it makes sense. All right, good. Good, good, good. All right. Well, if there's no other questions, thank you so much for coming by today. The interesting day in the market. We'll have to see how things turn out tomorrow. But have you changed your plan since you trade? How did you figure out it was time to change your trading plan? Well, probably the most important thing is if you're using a certain trading plan, Frederick, and you're doing it correctly, you're following it correctly, you're doing it for as an amount of time that makes not like 2 days, but I mean you're doing it for a while and it's not working out. Basically, if it's not working and you don't feel comfortable with it and you're not making money with it, then it's probably time to change your trading plan. And then also, there are good trading approaches, good trading systems, but if your personality does not jive with that particular system, it's really not going to work for you. Like, for example, there's some really good long-term trend trading systems, but if you have a problem holding a trade more than 3 or 4 days, even though that long-term trading system has good backtest results, it's probably not a fit for you, right? Because it doesn't fit your personality. For example, and another example is, let's say you find a good trading system that works really well, but you have to be up in the morning to do it. And let's just say you're not a morning person. Well, that's not going to fit with your personality as well. So, if something's not working, if it doesn't feel right to you, then you may want to look for a different type of trading approach. There are so many different types of trading approaches out there. You can literally find one that just fits your personality as far as risk, time frame, how long you hold the trade. Some people like to be in, out quickly. So, can you give me an example, Frederick, of why you're asking the question? I mean, maybe something that you're dealing with, or are you thinking about changing how you trade, or maybe you can explain to me a little bit more why you asked the question. But yes, I have changed how I trade over the last 23 years several times, and I have changed it because I felt like things I was doing before worked, but maybe it just didn't fit me, my personality. You're always evolving how you trade. You're always trying to calibrate it to really, one, make money, and two, to fit your personality and your emotions. So yeah, in 5 years, will I be trading differently than I'm trading now? Good chance, because it's always evolving. It's ever evolving to fit your personality and what you like about trading and what feels comfortable to you. Okay. Well, Frederick, being that you just started trading, I think it's a great thing that you started trading. And let me give you an example. Let's say you have been playing golf for 20 years. And like, you're okay, you're not great, you have a lot of bad habits from just playing golf. You've never had any professional instruction. And then let's say you go to a golf professional and you say, okay, hey, I've been golfing for 20 years, but now teach me how to golf correctly. It's going to be very difficult for that golf professional to teach you. You have to break so many bad habits. You just starting to trade are in the enviable position of not having any bad habits. It's the best position to start from. You don't have to unlearn bad habits. If somebody never picked up a golf club in their life, and they go to a golf pro and they say, teach me how to golf correctly, they're in a great position. They don't have bad habits. They're going to learn things correctly right from the start. And being that you've just started, it's just like that with the golfer who's never golfed and went to the professional. So that's a real big positive, Frederick. So Don't learn any bad habits. Trade correctly. Get those pathways in your brain of doing things correctly from the very beginning. So, all right. Hey, I'm just going to leave you off, and I'd like to remind everybody, just, be nice to people. Give somebody a wave or open the door or give them a smile. It really could make their day, and then they can make other people's day. So it's all free. It's going to make you feel good and make them feel good as well. So be nice to people. Do a nice gesture. Doesn't hurt, right? All right, everybody. Well, thank you so much for spending your time with me today. I hope you learned something. If you did, do me a favor, hit the thumbs up button. That always helps with YouTube. So, all right. Sounds good, Frederick. All right. Well, hey, hopefully see you tomorrow during the last hour of the market. Have a good day, everybody.
U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.